day, everyone. I'm Topouzian. I have the privilege of being Michigan Venture Capital Association's Executive Director. And we're here doing what has been a weekly webinar series on a variety of topics, some of which has been centered on COVID-19. But today it's a little bit different. So we recently, if you follow us and pay attention to what MVCA is doing, we have released our 2020 research report, something that we've been doing now for a number of years. And today we've got two esteemed panel members that are going to really take a look at some of the items that are in the research report, expand on that a little bit, kind of give some additional commentary to it. So with that, I'd first like to introduce Michael Gross. Michael, you can wave your hand, although they can see your name in there, so they know who you are. So Michael is the MVCA board chair, our current board chair. He's also managing director at Beringea. And then we have Jeff Rinvelt. Jeff is the vice chair of MVCA and also the research report committee chair. So he's wearing two hats, technically three. He's got a Detroit Tiger hat on today, and in the midst of the snow, he's waiting for spring training. So we appreciate that. But Jeff is a principal over at Renaissance Venture Capital. So thank you, Michael, Jeff, for joining today. Again, attendees, if you've got questions you'd like to submit, certainly do so, and we'll try and get to those either throughout or toward the end. But we're going to talk a little bit about this year's research report, which again, we've just recently released. And I think we'd like to first talk about some of the strong fundraising that really has occurred in the last year. So the research report shows VC fundraising activities was fairly strong, and certainly led into an increased amount of VC under management. And in Michigan, we've seen that steady growth, 52% in the last 5 years, among Michigan, each headquartered VC firms for VC funds under capital management. Jeff, Michael, do you have some observations you'd like to share with the audience about that?
Sure, I'll start, Ara, and thanks to everybody for coming on to this webinar. If you're like me, you've gone to a lot of these, and we'll see how good our internet is after this. I've told my kids to stay off, off Fortnite and Command, and all the video games, but it's always a challenge to see if your Wi-Fi really holds up to what can happen. First of all, I want to thank everybody, all the VC firms in Michigan, for allowing us to collect this data. I think this is year 14 that we collect this data, and I'm always impressed that they allow us to look inside their firms and actually do all the work to collect this data. Also, a huge shout out, I saw Emily and Molly on the side of it. Entry Point does a great job sort of putting it all together. So just a really quick thanks, and we always appreciate this, and we don't take this lightly. So there's always been a number of data points that I've looked at that sort of has shown Michigan to be a great place for investors. The one that our firm and we always look at is R&D versus venture capital dollars inside Michigan. And if you look around the country, there's a lot of great systems that we look at that usually have a 30-to-1 ratio. Those are like Texas, Illinois, Washington. But Michigan always stands out with a great ratio of almost 150 to $1. So that's a huge thank you to the Michigan higher education system, and all the R&D they put out. Basically creates a very nice base basically for venture capital grow. There's also tons of other reports that everybody else looks at. I've seen patents issued, I've seen engineers per capita, and all of those basically point to Michigan being a great place to invest. And I think some of those numbers are the output of that. So Michael, is there any other comments you have?
Yeah, I think one observation that we're really pleased with this year's report was the increase in funds under management. And Ara, while you mentioned a 52% increase over 5 years, we had actually seen 3 consecutive years of decline in capital under management in the state. And so bending that curve back up, I think, is really important for the VC community. And that was driven by some pretty good underlying events. So when you look at the big drivers of the increase, Arboretum raised a record $250 million fund for their fifth fund. Venture Investors, another longtime investor in the state, raised $75 million for Fund 6. And then Grand Ventures raised their debut fund at $28 million. And that's a really sizable debut fund for an emerging geography of strength for the state of Michigan. And so when you look at the balance there, you've got really long-time fund managers as well as debut funds in the state. And I think that bodes really well for the strength of the ecosystem broadly. And Jeff, you mentioned that statistic on R&D to capital available. And we do have such a strength of innovation in the state, but I think it also shows a gap in the state between VC dollars available and innovation activity. And when we get these increases over time and consistent increases in capital under management, we close that gap. And I think when we can close that gap and get them more in line with the rest of the nation, we'll show a really broad, healthy ecosystem between innovation and venture capital activity.
Yeah, to kind of follow along on that theme, of fundraising, and again, we're talking that last year was sort of a 152% increase is what we've found in the amount of venture capital in startups over these last 5 years. What factors do you both feel have led to this, and how do we keep this going? How does the momentum continue? Michael, do you have some thoughts on that?
Yeah, and Ara, I think you're speaking to the record fundraising level at the company
Yes.
level as well. And yeah, obviously a blockbuster year at $2 billion capital raise, and Rivian had a big impact on that at $1.5 billion. But even when we adjust out that Rivian raise, we're still at $514 million capital VC dollars raised for Michigan-based companies. That's back-to-back record years for VC raise, and I think it shows the strength of the opportunity set in the state, the strength of opportunities that are driven by that innovation that we talked about previously. And I think there are a few factors that are driving this activity. We talked about the strength of the companies, the increase in capital under management for Michigan-based VCs, but importantly, the leverage we're getting from out-of-state investors as they see the strong opportunities in the state. It's a statistic that we track pretty closely at the MVCA. It's an important statistic. We look at the ability of Michigan-based VCs to leverage out-of-state VC dollars. Over time, that's ranged in the $3 to $5 range. So for every dollar of Michigan VC in a Michigan-based company, we get $3 to $5 from an out-of-state VC. That ticked up a bit last year at a really healthy level of 7. And this year, it was a staggering level of 45.71. Again, weighted by Rivian, but when we adjust out Rivian, we're still at $11.45 of outside of state VC capital for every dollar of Michigan-based VC invested in a company. And I think that shows the fact that out-of-state investors are realizing the fertile ground here we have in the state. And if we can continue to execute in that $7 to $10 range for leverage on Michigan VC dollars, while also increasing the funds under management in the state, we will have a very healthy environment for our underlying VC-backed companies.
That's a very key point, and that's always a number I look for, attracting dollars to Michigan. But I also want to point out that we've been pretty good at supporting our own companies. 97% of the VC-backed companies in Michigan have some Michigan investor. But this does point out basically that we do have work to do. And even in your past comment that, I'd like to see that ratio, more Michigan dollars than out-of-state dollars. But I do think that's a trailing number. I mean, as long as we're consistently having good companies and making good investments, I think those Michigan firms and having, more out-of-state firms actually having offices here will be they'll actually show up. So again, I think that's a trailing number, and that's something that we see in a leading side of things. And Ara, you mentioned what we want to do going forward. I think there has been a great way at attracting people here, but I think we need to retain those and even attract more people. It sounds simple, but it's one of those things that you have to do consistently year over year. And there's always other firms, other countries outside of the country that are looking for places. So we got to make sure that we keep doing the small things and still keep focusing on that.
So let's move into talking about really the small business economy. So let's talk about some of these startups. And, for the last few years, we've seen that the sectors that do well here in Michigan really are centered around life science and IT for venture investment. So can you both sort of expand on this topic by breaking down these sectors, what you're seeing as types of startups, as well as the importance of support these kinds of entrepreneurs, especially probably, as we're going through this current crisis too. Michael, what do you think?
Yeah, sure, Ara. We've got the pie charts on page 22 of the report that show the sector breakdown. And when you look at it on a high level, life sciences and healthcare at 38% and IT at 34% looks pretty heavily weighted. But those are extremely broad categories, which is why we provide the sector breakdown. And so if you kind of combine all of these charts and look at the subsectors in those broad categories, you see a pretty diverse mix of industries represented. So 29% in software, which largely mirrors the national trend. Software is just a big, broad category for VC dollars. And then second would be 16% in medical devices. And medical devices, that would be above the national trend. It would show the strength in Michigan historically for devices, followed by 7% in healthcare services, 7% in mobility, which has come on really strong in the state, 5% in media, 5% in hardware, IT hardware, and then a host of categories in that 3 to 5% range. So when you look at the charts more broadly, I think it shows a very diverse set of VC opportunities, and it shows that fertile ground isn't too concentrated in any one industry.
Yeah, I'll also, say that it does mirror the country. I mean, again, at these high levels, you're always going to see, software and medical, and pharma is sort of the biggest buckets. But, there's definitely some areas where, as you dig in deeper, there's areas where we're stronger. I would say that, advanced mobility is a great area, and we'll see if that keeps going. But advanced manufacturing is a great area too. Most areas of the country would sort of die for the medical devices activity we have in this country. And I would actually always say we're never going to say no to a startup in Michigan, but as a region, I think we should always focus on what we're doing well and lean into those. I don't want to be everything to everybody, and I think those areas are ones that we can, they'll ebb and flow as investment theses for venture capital firms, but I still think we should always double down on where we have our strengths and making sure we're doing the things that we do well, really, really well.
So given the breakdown that Michael just kind of went through, in the midst of this current crisis of COVID-19, do you guys think that healthcare sector will drive some more VC interest in that particular sector? And then maybe what other sectors do you think may either evolve due to what we're going through? And what do you think as far as some of these percentages, and how might they change when we look at this report next year?
Yeah, healthcare has been on a tear basically for a number of years. So, it's going to be hard to be better, but I think we have a really strong chance of it. The open question sort of is, will, the IPO market will probably slow down. Will M&A and those crossover investors, will they step up and sort of, change the dynamic so these companies can stay private longer? It's going to be an interesting mix, and I think we have a really good chance because the focus is sort of now on on drug delivery and healthcare so much inside of our market. I've never heard so much about drugs and just in the general consciousness. So the one area that I think we've talked about, but I think it's going to be even more is healthcare IT. The presidential action sort of on telemedicine, and there was a whole bunch of other things that basically I haven't been able to unpack, and it's very interesting to start seeing the VC firms start unpacking this. There's a whole other industry that's being made right there that sort of opened up a lot of those things that were that were constrained around HIPAA and some of these other these other legislations. So I think that's just starting to be unpacked, and I think it's going to be very interesting to see how entrepreneurs basically interpret that and create the next companies that are going to be interesting.
Yeah, I think that's a good point. when we look at those opportunities in healthcare that are top of mind and obvious with the COVID situation, those have been in play for some time and in the works for some time. Healthcare systems were already redefining their delivery models. I think what COVID is doing is just kind of catapulting that redefinition of delivery models. The healthcare will face a little bit of a headwind also due to the fact that they have had to pivot so strongly to deal with COVID, and the hospital systems are struggling right now because they have had to defer a lot of their elective procedures and a lot of the more profitable centers for the hospital to take on these emergent situations. And so those type of crises throughout the healthcare systems always have a headwind, and we saw this in 2008 for healthcare VC investing. So it'll take some time for those IT budgets to loosen up again. But given the critical nature of redefining delivery models, I think a lot of the obvious ones like telehealth and other healthcare IT solutions should be pretty well positioned. And hopefully we'll see a return to normal hospital spending in the not too distant future here. But other industries you asked about other industries that'll do well. Mm-hmm. We're seeing strength and a lot of interest in any technology that decreases human interaction and makes any process more efficient. Of course, VCs were already focusing quite a bit on those models, but again, it's kind of catapulted with COVID. It just makes it so obvious when you can cut inefficient steps out of the process, and a lot of those inefficient steps include human interaction. Those things are just becoming more obvious, and I think coming out of COVID, there's going to be a lot of strength in things like remote research, virtual reality models, and just overall efficiency software.
Well, and you're definitely seeing that in the news releases that we've been watching the last couple of weeks. I've noticed different portfolio companies that were certainly on the radar, but to your point, catapulted even higher because of what they're doing. Has got even more relevance, even for what's going on now. Let's take a little different, approach now and talk about something that some information that we know through the MVCA, National Venture Capital Association, had released information not too long ago that Grand Rapids was a top location for venture investment growth over the past 5 years, which I think is very cool. Talk to me about what types of activities is happening on the west side of Michigan that you think is attributed to this growth. How about you, Jeff? What do you think about that?
Yeah, I'll start off. I don't think it's a coincidence that basically Start Garden started right about that same time. Start Garden, and all the other things that go around with it. They do 100 ideas pitches. They've done Seamless. They've done a lot of great experiments sort of around the ecosystem. And they've done a really good job of sort of meeting the community where they are and starting to lead the community into different directions. There's also a great ecosystem around there. You got Grand Valley, the Right Place, and they've all sort of contributed to what has been a great success story. And it was great seeing it sort of called out with just one other. I think it was Bend, Oregon, was the other city that was called out. So it's quite a feather in a cap, and hopefully Grand Rapids will get more of the love that Detroit has seen and Ann Arbor has seen over the years, basically. Michael?
Yeah, I think that's right on. It's been awesome to see the activity evolving there in Grand Rapids, and I think the one thing that Grand Rapids does especially well is the cohesiveness of the community, the interaction between large corporations, those entrepreneurial organizations and incubators, and then the capital markets, whether it's the angel, philanthropic, or VC markets in Grand Rapids. There's a very cohesive community feel there, and I think they do that as well as any geography in the state, and that's a model we should look to. And I think people outside of Grand Rapids are starting to take notice and pay a lot of attention to the opportunities there.
Yeah, for sure. Let's move into angel investment. So we're always talking VC activity. Let's talk a little bit about sort of angel activities. This is certainly an important component to investments, certainly in the pipeline. They're usually, the first responders, if you will. And so our latest research report is showing such a major increase in angel investors. I think it was 1,300 plus, which is over 400% of an increase in the last 5 years. Can you both talk about the importance of angel investments and how that's contributed to some of the more important overall investment deals in the last few years? Michael?
Sure. Yeah. Angel investment has been an increasingly important portion of the cap table on many VC-backed companies and even pretty late-stage VC-backed companies. And the data was great in Michigan to see both the angel dollars invested and the number of companies backed increase. And that represents 3 consecutive years of pretty significant increases. I think we were up 80% in 2019 over the 2017 numbers. So that's an 80% increase in just 2 years. And this is a consistent trend to what we've seen nationwide, where angel networks are starting to be much more organized and much more nimble in how they review deals. And as you see in that organization, the scale of angel investment in any given opportunity has really increased. And again, it's a nationwide trend, and certainly we've seen it in Michigan, and it's become, as I said, an increasingly important portion of the cap table.
Yeah, angels and seeds are sort of the heart of any ecosystem. And it's really great to see that size grow from, basically where everybody could sort of be in one bar together, where now we've sort of got a small auditorium, and I'd love to see a stadium. I think that's one of those things that we need to focus on to sort of increase it. I think that's a good indicator that if we can hold on to that angel community and grow it, will be a good indicator for how Michigan grows over the years. Angels usually are local. I mean, there are some seed organizations that travel, but they usually travel not that far. So you got to make sure that that angel community is robust and basically stays around in your community.
So we're getting some questions I think we're going to get to in a few minutes, but it certainly, as you can imagine, pertains to COVID. And so here we've shown last couple of years that we've had this tremendous amount of growth and activity in Michigan. What do you both think as far as how do we keep this momentum going amidst this current crisis? What do we need to do to minimize the effects of COVID so that we can keep a good level and even grow for the future? What do you think, Jeff?
Yeah, things are definitely going to be different. I think we can all say that. Yeah. VC is such a long business, and we're just looking at some of the Q1 data. It actually looks about the same. I mean, volumes have continued to drop, but dollar amounts are the same. A lot of late rounds. So again, it's just continuing that trend we've seen. I think second quarter is going to be completely different, and it's going to be down. I expect fundraising to be down also, but probably not as much as deployment. There still is, at least that we're seeing, the financial systems are still working. There's still people that need to put dollars to work, and the stock market is not giving them the returns they want. So we're still seeing that part of the ecosystem working. Deploying capital could be a patient, but it can't be patient forever. I mean, I think Michael can comment that limited partners always like you deploying capital and will wait, but it won't wait forever. We've heard a lot of VCs are open for business, but I still believe investing is a face-to-face business, but I'm old. So there's been a lot of new models we're starting to see with venture capital, and they're changing around the world. Michael, you're of a different generation. I'd love to hear what you think, if that's true, or if I'm just being an old fuddy-duddy. So.
Yeah, well, I would certainly agree. It's a face-to-face business. It's a partnership business, and it's hard to develop that level of relationship over Zoom. And I think you're right. We're seeing a lot of deals still close here at the end of Q1 and early Q2. A lot of those deals were already in process pre-COVID, and so those relationships were built, and people are continuing to work the opportunities. And you also mentioned venture is a long game, and so if you have a thesis on an opportunity and you're excited about a space and how it can change commerce, then overall that probably isn't going to change too much with the short-term impact of COVID. But it is going to be tough. I doubt we're going to have 3 record years in a row. Certainly, there's going to be a pretty big impact over Q2 and Q3. I think we will see quite a bit of follow-on financings as VCs look at how well capitalized their companies are to prolong both the next few quarters of COVID, but also potential sustained economic dislocation, which could drag on for a few years. So I think that follow-on financing will drive quite a bit of activity. We have the Q1 data, and then we'll see how long it takes to get back to face-to-face interaction. And we'll see, you know, as we said, it's a face-to-face business, but if we get real deep in the year and we're not relaxing the guidelines too much and we're seeing a spike in infection rates, then we might have to think about redefining some of the relationship building aspects of our business. When we talk about the ability of the community to get through the crisis, which was part of your question, Ara, I think it is great to be coming off back-to-back years of fundraising records and also a uptick in funds under management. So companies are pretty well capitalized. VCs have a lot of capital to invest to support their portfolio companies. And I think there's just a lot of collaboration around the table to say, you know, let's run sensitivity analyses on our ability to get through here in different scenarios. And if we see a hole, let's talk collaboratively as a group on how to fill that hole. So I feel like we're pretty well positioned to get through the tough times here. And the question will be, how long does this economic dislocation last?
Right. So let's take some questions that we're getting in. But before we do that, Jeff, I know how old you are, and you're, I think, a year older than me. So I'm not old, so you're not old. So I want that on record.
Entrepreneurs, you'll feel really old. There you go.
Yeah, well, that's true too. It's actually a good question. You know, when Michael, you talked about collaboration. So I had a question here about. Curious about the current level of cooperation and collaboration between the angels and VCs. Is it sufficient for moving companies along, or what can we do better?
Do you want to take that first,
yeah,
Michael? You're in the trenches. Yeah.
Sure. Yeah, that's a great question. There's another question about angels and COVID, and so we can kind of tie these together. But as I mentioned earlier, I think the organization of the angel networks has brought some scale to that activity. And I think it has increased the collaboration between VCs and the angel networks. And I think over the last 12 months, certainly, in certain geographies, there has been really strong collaboration. And I think we're looking more as VCs to use angel networks to fill out rounds, and we're looking to do that more proactively. So it's great to see that organization and the ability to move quickly. And I think what we can continue to do better is to continue to build those relationships with the more active VCs in Michigan and the Midwest and the angel networks. And so we need to be thinking about ways that we can just increase that connectivity as VCs and angel groups work together on more deals. That gets more natural. You then will more easily do the next deal together. But when we haven't worked together on a deal, I think it's important to think about ways to just get to know each other better so that you feel more comfortable collaborating as actual investors. And then as it relates to COVID, I think that's a tough question. My sense is that folks who are committed to angel investing and have said, you know, that's something I want to do from an overall just activity level and from a financial return perspective, probably have a pretty long view on that level, that type of activity. And I would be hopeful that a dislocation like this wouldn't cause them to say, you know, angel's just not for me. If you were excited about technology trends that change the world 6 months ago, my sense is you're excited about that today. And so to the extent you still have those disposable dollars that aren't tied up in other investment opportunities and your overall portfolio hasn't been hit too hard, then I would anticipate the angel activity to continue to be pretty strong.
Yeah, and I think that the other question was around corporate venture capital too, and angels. I think the same message can sort of be said at the same time. You know, we do usually see a downturn, you know, in corporate venture capital when these downturns happen. again, it's going to be interesting to see how much of the, this innovation is in their DNA and the corporate's DNA side of it. So I do see some cutting back, but again, I hope with communication and education, we can show people that this is a long-term game, and that, the investments now are probably going to be one of the ones that are really great vintages for the venture capital firms and for the corporations basically exiting, if you look at the long-term side.
Yeah, Jeff, and I think that's a good point. And if you think about the overall trend of corporate investing over the last 5 years, it's become more popular, and corporations have been much more organized in setting up their venture efforts and their venture funds. And so you would think that that organization and commitment to venture, where they've actually allocated part of their balance sheet and have a team staffed up or a partnership with a firm to manage that activity, would keep them active in this time, more so than in 2008, when I don't think corporate venturing was as widespread as it is today. We'll have a setback. I think a lot of corporate venture initiatives that were in the works, where they were saying we need to have a fund over the next 12 years, are probably on pause right now. But for the ones that are already in the game, they should be active in this period. And I think that ties to another comment you made earlier about venture activity broadly in COVID. And I think this applies both to angel and corporate as well. Some of the best deals come out of the back end of an economic downturn. When we looked at the back part of 2008 and really 2009 and 2010, there were some really great opportunities where companies were just struggling with the dislocations in the capital markets and the inability to lever up with debt, or the inability to raise coastal VC dollars. And there was just a great opportunity set. And so corporate angels and VCs should really be leaning in and should be open to business and looking at how they can help companies onto the next phase for this recovery.
Yeah, it wouldn't be a C19 venture cast if we didn't mention all the companies that were created in 2008, 2009. Even locally, we forget, Duo was created in 2009. So, we all have our examples, and we have to mention it because it's required now in any C19 venture cast. So.
So we got one more question here. I don't know if you guys can see this one. Oh, a few more have popped in here. This is an interesting question of how, a little bit off the beaten path of what we're talking about, but an interesting one nevertheless. How do you view companies that forego angel investment? It's kind of a interesting question.
Yeah, and I think and the parentheses are important there, and instead invest their own money.
Instead they invest their own money.
We love to see entrepreneurs that invest their own money in their companies. And I think it just shows a tremendous level of commitment and staying power and for the thesis and the cap table. So really love to see teams and entrepreneurs investing their own money. And we don't necessarily say angel in or angel out is a positive or negative on a cap table when we're reviewing a deal. So really do like to see entrepreneurs investing their own capital.
Yeah, I mean, in general, I think everybody does. I mean, and if it, sometimes it's not even your own capital, sometimes it's revenue, which is even the better side of things. Sometimes it may shift which venture capital firms you want to look at. There's later stage, even, Beringea does a good job in this area, but there's later stage venture capital firms that, actively look and mine and look for just ones that are bootstrapped. And I think we're going to see a lot more companies that are bootstrapped now. And again, that's why some of these strongest companies are built during these downturn, because you got to engage with customers, and customers are always the ultimate, the ultimate truth in entrepreneurship. So
we've got a question here. It's a good question. You could tell someone read the report, and I could even answer this, I think, but certainly, I think it's certainly worth noting. This individual is asking about sort of the fundraising percent, target goals was off by 14% this year, which is considerably different from 2018 being, close to 50% off. In 2017, similar, 45%. what do you guys think are the key catalysts for this change? I mean, I think this is certainly good news. I mean, I almost look at it as where the fundraising was right on target, pretty close to it. I don't think that 14% is a big deal. But what do you think led to that change?
I can sort of comment first, Michael, if that's okay. But you know,
Sure.
being a limited partner, you know, we're seeing this a lot. You know, venture capital and private equity in general is sort of becoming more of a preferred class as a lot of these you know, as these managers and even you know, angels and stuff are looking at, you know, ways to get better returns. They're definitely being pushed into private equity. So you know, private equity as a whole has had a lot of money basically pushed into it. You know, the public markets aren't just giving the returns that they need basically to generate to fund their pensions, to fund their healthcare needs. So it's been quite a class that basically, you know, in general, we've seen more people going into. It's going to be interesting to see next year how many people, you know, if that number is still 14% or not. And, you know, again, I don't think it's ever going to be 100%. It shouldn't be 100%. That means we've got too much, you know, inventory out there. But if anything, I'd have to guess that number is probably going to slip by a little bit next year.
Yeah, and I think, you know, part of it's math. We don't have too many funds in the state that are fundraising in any given year. And in this year, we had 3 great fundraise closes that we mentioned earlier. So anytime you have 3 substantial funds hitting target in a year, you're going to be closer to goal. And I think it was great to see those fundraisers get done. But I totally agree, Jeff, with your commentary. Venture is an important class for a lot of LPs, and the overall set of VCs in Michigan has evolved so much over the last 10 years. And I think the 3 fundraisers that we mentioned and the fact that we did grow and hit close to target this year shows the overall quality of the VCs in the state of Michigan and how that's evolved over time. And I think it's a really encouraging trend.
Well, we've got about 5 minutes left, and if there's any last minute questions, any burning questions they want to ask, now's the time to probably do that. But Jeff, Michael, maybe you can just give some of your final thoughts, and maybe, you know, I wonder if folks would like to even know, how do each of you utilize the research report? I mean, are you using that? Are you talking about the numbers with portfolio companies? Are you doing it when you're networking with out-of-state folks? How do you guys utilize these reports that we've been doing all these years?
We use it a lot. I mean, you know, us engaging some of the better venture capital firms around the country, you know, we use this as a great entry point, basically to show how strong Michigan is. I mean, that along with the vendor list, you know, basically the list of all the players sort of in Michigan gives a good picture of what Michigan is in a very easy way, and it's a great way to sort of inform the funds we're talking to, or re-engage the funds we're already in. You know, I also think it's a great way to educate the general public. You know, this has been a good way to attract more angels, attract more politicians, understand that, you know, what the size of this economic engine is that you may not see. I mean, you know, it's, you know, you go around and there's enough small entrepreneurial little companies around Ann Arbor, Grand Rapids, Detroit, that, you know, and they're mostly in small little places that you don't really see it until it's actually pulled all together and go, hey, this is a really big industry in Michigan, and quite an impressive engine we sort of built.
Yeah, and I'll answer it from 2 levels, both as a VC and at the MVCA. You know, as a VC is a very geographically focused business, and so it's great to have data about your own backyard when you're interacting with LPs for fundraising or with anyone else in the market. So a lot of the same trends that Jeff mentioned that are the use cases for him are the same for us. And then at the MVCA, it's really rich data to inform our advocacy efforts and our strategic roadmap. So we are laser focused on the health of the VC community in Michigan, and having this long-term trend of data and having the rich detail of data that we're able to get here, which is really unique and differentiated for geographies, allows us to think about how we should be directing our efforts and where we should be spending time in advocacy and how we should be interacting with folks outside of the state to make sure that we're continuing to grow both VC funds under management in Michigan, as well as making sure the companies in the state are able to raise capital. So it's really great data for us.
That's a great way to end today's webinar, Michael. So I appreciate that. Jeff, Michael, thank you for taking time out of your schedule. I don't think any of us are working less. We're probably working more. So I can easily say thank you for taking time out of your busy schedule to join us. And for all of you that took the time to watch today, we appreciate that. For more information on MVCA and also to access the research report, you can download that online. You can go to michiganvca.org. Until next time, we want to thank again both Michael Gross and Jeff Rinvelt for not only today, but really their volunteer leadership that they provide for MVCA. And with that, again, I'm Topouzian and wish everybody a fantastic day. Thank you.
Thanks. Have a great weekend, everybody.